Well, in the note business or the distressed debt business, it's a little different than real estate syndication. And the reason I say that is because we don't have as much opportunity to leverage. And that was similar to mobile home parks as well. Mobile home parks, there's not as much bank financing as there is with apartments. And that's probably one of the, you hear the advantages and disadvantages of both. So when I see, especially like mobile home parks, for example, there's a lot of accelerated depreciation. There's a lot of tax advantages because it's all infrastructure, right? So you can, accelerate a lot of the depreciation. Whereas apartments, that's not the case, but there's actually more financing for apartments and there's more, buyers of apartments. It's, maybe it's a little more sexy than mobile homes are, but so it's more bankable. And that's one of the things I do like about it. But I think I like, this is going to sound a little hokey. I like a lot of different alternative investments. I don't like any one arena. And I had originally started out in the single family space, but I do like the scalability of larger complexes. I like I like playing the role as sponsor. I like being able to bring my experience and expertise to a deal. So I've been in a lot of negotiations over the years. So that I think is an advantage that I can bring for someone. So I enjoy the art of the deal, so to speak. And but I do believe it's good to be in multiple verticals. And I actually run a group called Strategic Investor Alliance, which is for high net worth folks. And one of the things about that group is, it's not just about notes. It's not just about multifamily. It's not just about, insurance funds and different things that we invest in. I like these different vehicles because they all have different returns. They have different timelines. They have different, market volatility. So there's a lot of advantages in being involved in different asset classes is the way I look at it. So that no matter what the market's doing, you have something that's there. And I think it's good for people to sweep some of their profits or off the table into safer vehicles and buckets, whether that's, qualified plans and IRA accounts or insurance contracts, as well as other businesses and other types of funds and investments. So I like to sprinkle it around a little bit, if that makes sense.
Yes, of course. And, looking at so many different investment vehicles, of course, I mean, you're so experienced, but how do you educate yourself about so many different asset classes or ways to invest?
That's the biggest challenge because there's only so much time in a day. So, in some ways you're trusting other folks for their expertise. And it's really, being able to network with the people that are experts in their areas that you can trust. So that's a little more challenging, but you are correct because a lot of these investments have different advantages, right? Like my note fund doesn't really have tax advantages, whereas your apartment fund does. And your apartment fund might be a long period of time. It might be 5, 7, or 10 years in length. My note fund is 1 to 3 years. And now we have a liquidity fund that's very liquid. Well, notes are liquid. Apartments aren't, right? Or, mobile home parks aren't, or storage centers aren't, especially development projects. They tend to be a little riskier where there might not be as much cash flow in the beginning. So there's a whole array of different things that investors like, and it could vary in their time horizon as well. Like you're a young man and I'm significantly older, right? Whereas my appetite might be different than yours, and you might have more time to ride out a longer project. Then there's also real short-term funds too that might only last a year in length. It could be a hard money fund or something like that. So there's a whole variety of different types of funds. I do like the real estate backed assets. I do like having collateral. But there's a whole variety of different ways to stay diversified where, different markets aren't impacting all of your investing. And there's still opportunities for you, and you're not completely wiped out if something were to go sideways on you.